JBlog, November 22nd, 2009. Today we start by looking at the TED spread, something I have not covered before in this blog. TED spread is basically an indication of how much trust or mistrust exists between banks. Um, and this one has been dropping. We'll go to a 3-year chart on the TED spread. You can see the spike here. October, November, December, January of 2007. It was extreme. There was lots of 2008. Sorry, there was lots of mistrust between banks. They would not lend money to each other simply because nobody knew who would be going bankrupt next. That TED spread has been dropping as some normality has returned to the banking sector. The interesting point to look at is in the last 3 months or so, the TED spread has once again been going up. So there's starting to be some mistrust among banks again, which is not surprising because banks have been keeping still a lot of questionable assets on their record books. Um, and banks are still going bankrupt, and that bankruptcy rate might very well start rising once we have commercial as well as prime mortgages hitting a wall, and the federal insurance companies that are set up to protect people's money are running very low on funds. So it'll be interesting whether those will be recapitalized. I imagine they will be, but there is some doubt entering the market again, and I have obviously had my doubts for a very long time. Actually, it's not a doubt; it's just disbelief. Um, but that doesn't really matter. Fact of the matter is that even though the VIX, let's switch over to the VIX. The VIX has been dropping um, and been falling to new lows right here, even though the VIX has made a higher high right here in the last month. So this is an interesting development. The VIX having made a higher low and a higher high as well. We'll see how that goes. But going back to the TED spread, it again indicates that some risk is returning into the market, which could very well lead to some liquidity problems. And seeing that the current rally is purely based on liquidity and is basically based on carry trade, where people are borrowing basically for free in US dollars and then buying assets for that. Any kind of risk entering that market and people covering their positions could bring this market to its knees extremely quickly. I have been talking about that I have this strange feeling that this could be a 1987 repeat where it's all over in one day. Simply because the current rally is driven by momentum. It makes absolutely no sense whatsoever fundamentally. There is no reason the market should be where it is, and yet it just keeps on rising, driven purely by liquidity. But if that liquidity somehow is not enough to keep driving these prices higher and higher, then it's going to fall, and when it falls, there's nothing catching it. There is no fundamental reason for the market to be this high, so the fundamentalists are certainly not coming in going to buy it, saying that, oh, it's cheaper, I'm going to buy it now, it's value. There is no value here. And we have seen some rough trend violations, possible trend violations. This longer line here was violated than last month, could possibly be violated again next week. We'll see how that goes. Then we'll just look at the 1030, exponential moving average, which I like looking at, crossed over here for the first time in, I believe, in 6 months. There has been no other crossover since July, and it has once again crossed over. Now the red line is still above the green line currently, but this kind of indicates some slowdown happening. Other technical, and again we're dealing here mainly with technical non-confirmations, because when you look at the price only, everything is hunky-dory, there's no problem whatsoever. But when you are looking at the technical indicators like the RSI specifically, we're going from a strong rally to a weaker rally to a weaker rally to an even weaker rally. And even though this rally has made a new higher high here, the RSI has not confirmed this higher high, and that is once again those technical confirmations that I'm looking for. And right now we are set here for another downturn. The stochastics are high and just crossing over the 80 barrier, so we'll see. This could drop. OBVs are possibly once again crossing over, and if this thing gets below here and drops, if the bulls start running, again, there's nothing that's going to catch this thing. It's just going to be too big because it went too far, too high, and sooner or later that needs to find some sort of balance. Apple, interesting. Apple has made a double top here. Now double tops don't seem to mean very much these days anymore. Technicals are I've seen so many times in the last 6 months where technicals, there was a clear technical setup for very high probability setup, and it just turns around and does the exact opposite. But still noted, there is a double top here, but on a much lower RSI. Could that mean that Apple is in trouble? It certainly could, but Apple has been fooling people for a very long time. Agrium very strong. All the agriculturals, Agrium, Potash, and Mosaic very strong. Let's skip over this one. Now this one I find interesting. Goldman Sachs. Goldman Sachs has definitely developed a strong bearish attitude here. Has been dropping quite significantly from the highs. So that's certainly nothing. Perhaps the market got a little bit tired of the people at Goldman believing that they were doing God's work and publicly saying so. The fates have a tendency to frown upon statements like that. SKF and FAZ are still not doing very much at this point. What I'm surprised about is that, considering that there is some bad news that came out on the real estate side of things, the real estate inverse is not reflecting that in any way. And it is still going down, so I must say I'm a little bit disappointed there. STLD, steel makers, and are still showing higher highs, but of course the most important chart to watch is the US dollar chart, because as soon as the US dollar, let's look at the actual US dollar chart, as soon as the US dollar turns around and goes back up, this whole house of cards will fall down, because everything is based on an ever decreasing US dollar, and that's a very very one-sided bet at this point. Almost everyone is a dollar bear. So if this turns around, there'll be some massive short covering, and that could unravel very quickly. So here's the US dollar chart. Again, we have a bit of a double bottom and possibility again of this turning up. It'll be interesting to see if that happens. So with that, I'll let you go for today. Not much happening. Bullish the US dollar. Myself, I'm bullish the US dollar. I'm bearish the markets, and I'm just standing by waiting for another 1987. We'll see whether that happens. Good luck. Hope you make lots of money, and have a good week. Bye.